Hey guys, welcome back to another episode. In this video we will be going through our very simple, yet profitable SMA Fibonacci trendline trading strategy. If you want more videos, more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. There are multiple ways to trade using the Fibonacci retracement tool, but I have found that one of the best ways to trade the Fibonacci is by using it with trend lines. The Fibonacci retracement tool was developed by Leonardo Pisano, who was born in Pisa, Italy, the city of the Leaning Tower, in about 1175 AD. Pisano was known to be one of the greatest European mathematicians of the Middle Ages. He developed a simple series of numbers that created Fibonacci ratios, describing the natural proportions of things in the universe. These numbers have been used by traders now for many years. Fibonacci levels work best in trend markets and do not provide any benefit in ranges. With this Fibonacci trading strategy, you will learn everything you need to know to start trading with the Fibonacci retracement tool. Here is a picture of the different ratios that Leonardo created. We will get into detail later on as to which of these lines we will use for our trading strategy. Your charting software should come standard with these ratios. However, you are the one that puts them on your chart. Many traders use this tool, which is why it is important to have a trading strategy that incorporates this. You are going to need to know where to apply these fibs. You will need to place them on the swing high or swing low. So, here is what it would look like then on your chart with the Fibonacci retracement. And here's a quick way to remember this concept. If it's an uptrend, you want to start with the swing low and drag your Fibonacci level all the way up to the swing high. If it's a downtrend, you start with the swing high and drag your cursor all the way down to the swing low. Simple enough. Let's go ahead and look at all we will need with this trading strategy. Trading tools for Fibonacci trendline strategy. First, Fibonacci retracement. Second, trend lines. Third, moving average indicator. This trading strategy can be used with any market: forex, crypto, stocks, options, and futures. It can also be used on any time frame. This is a trend trading strategy that will take advantage of the retracement of the trend. Forex traders identify the Fibonacci retracement levels as areas of support and resistance. Because of this, these levels are watched by many traders, which is why this strategy could be a difference maker to your trading success. Since we know some information about the Fibonacci retracement, let's look at the rules of the Fibonacci trendline strategy. Rule number 1. Find a trending market. Traders need not buy the bottom or sell the top either. In fact, many successful traders simply focus on catching part of the move. The key is knowing when a strong trend has developed and when it may be coming to an end. Here is a useful tool for trend identification that may help keep you on the path of the trend. Moving averages. Moving averages are a simple yet powerful tool for spotting a market trend. If you are looking to catch the larger, longer-term trends, then the choice of moving average used should be longer. The type and length are a matter of preference. Some traders will simply look at a 50-day simple moving average. Others may use a crossover strategy, in which they wait for a cross of a shorter moving average such as the 50 to go above or below a longer moving average such as the 200. Whichever moving average you decide to use, they can provide a simple means of determining market trend. Rule number 2. Draw a trend line. Since you already identified that it is in fact a trend by looking at your chart and moving averages formation, now you need to draw your trend line. Draw this on the support and resistance levels as the trend is going up or down. Trend lines are a key component of trading and I always recommend using them when you can. Once you draw this trend line, you are good to move on to the next step. Rule number 3. Draw Fibonacci from swing low to swing high. Now, you can get your Fibonacci retracement tool out and place it at the swing low to the swing high. Remember, this is an uptrend, so we started at the swing low 100% and placed the second 0% level at the swing high. Rule number 4. Wait for the price level to hit trend line. So far we found a trending market, drew a trend line to validate this, and placed our Fibonacci at the swing low and swing high. This rule is the critical step to the strategy, so you need to pay close attention. Because we need the price moves to hit your trend line, stall, and go back in the direction of the trend. If it breaks the trend line and keeps going, and blows past the 50%, 61.8%, and 78.6%, then the trend is obviously broken, and you need to look elsewhere, because a trade with this strategy would be invalidated at that time. With that being said, let's look at our chart and see what happened. Great, it hit the trend line, so why can't we just go ahead and buy now since it is an uptrend? Well, if you ask that, good question. As I said, the market tends to follow these lines, but sometimes it will fake traders out and they will end up losing a lot of money when it breaks the trend. This happens every single day, which is why it is critical to have a strategy that will help you know if this break may occur. And we do not want any of that to happen to you, so let's check out the criteria to enter to help us make a safe entry. Rule number 5. Price must hit trend line in between 38.2% and 61.8% lines. This is Fibonacci golden ratio. Before I start to explain, look at the chart to see what this exactly means. The price retraced all the way back and tested the 50.0% Fibonacci line for quite a while before hitting the trend line and continuing to go to the upside. Once the price hit the trend line that we drew, we saw that it was in between 38.2% and 61.8% lines, and then our trade was one step closer to being triggered. Why does it have to be in between these lines for this strategy? We want to capitalize on the big retracements. And the 38.2%, 50%, and 61.8% lines have all been proven to be the best retracement lines to use with the Fibonacci. Once you find this, look for an entry. Rule number 6. Entry point. So, everything is lined up to make a great profit on this retracement. What is the last step to make the trade? In a buy, in order to make your entry, you will wait for the price to close above either the 38.2% or 50% line. In a sell, in order to make your entry, you will wait for the price to close below either the 38.2% or 50% line. Let's check out the charts to clarify this. Refer back to this example when you use this strategy. This shows us what our charts will look like before we make a trade. Note: if the price hit our trend line in between the 50% and the 61.8% Fibonacci line, then we would wait for a candle to close above the 50% line to enter the trade. The only reason to wait for a candle to close above the 50.0% Fibonacci line is because it is in between the 50.0% and 61.8% lines for this example. This process should not take very long, as our trend should continue upwards because of the previous support level with the trend line. Rule number 7. Stop loss placement. Your stop loss can vary based on what your charts are showing you. Look in the past for prior resistance or support. In the example trade, the stop was placed below the 61.8% Fibonacci line. Rule number 8. Your target levels. What are Fibonacci target levels? The Fibonacci targets are great because they provide great exits in a trend. The most important Fibonacci targets are: first, 0.00. Second, -0.272. Third, -0.618. Fourth, -1.618. You can add these targets by clicking on your Fibonacci properties and then adding these levels to your Fibonacci retracement tool. Make sure to add the minus sign. Here are other examples of Fibonacci trendline trading strategy. Fibonacci levels can also filter out trade ideas. No trader would want to go long or short in front of a big Fibonacci level, and their trade idea would be invalidated due to this situation. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and leave us a like to show your support. See you next time.